I think is going to happen now with all the tariffs and all the other trade disputes is that this dollar system is going to be over because President Trump wants a much weaker dollar. It doesn't want everyone wanting dollars. So that is a paradox in itself as well. If the rest of the world becomes less dependent on doing business with the US, and why would they do that? Well, because they can get better terms amongst themselves, in particular the growing BRICS bloc. They'll go to that bloc. They'll deal with other countries multilaterally. The multipolar world, I think, is going to decrease the demand for dollars massively, and that's being done by the Trump administration themselves.
Donald Trump's wildly erratic behavior, including the abolishment of entire federal agencies by fiat and the sudden imposition and removal of tariffs at random via social media posts, has created vast turbulence in the international economy. Yet instead of boosting dollar demand, long-term Treasury bonds rose only slightly, while the dollar fell 15% against the euro, 10% against the pound, and 10% against the yen. Commodity traders are gearing up for gold to resume its record-breaking run as mounting fears about a U.S. recession prompt the Federal Reserve to cut interest rates, and President Donald Trump's erratic trade policies weaken the U.S. dollar. Renowned market economist Mario Innecco issues a stark warning about the U.S. dollar's dominance. According to Innecco, Donald Trump's policies are not only destabilizing the global trade system, but are also actively pushing countries, particularly the BRICS bloc, to seek alternatives to the dollar. The 2025 BRICS Summit in Rio reignited global focus on de-dollarization, underscoring the strategic role of gold as a neutral reserve asset in an increasingly multipolar world. Innecco mentions that central banks in non-Western countries have been aggressively buying gold since 2022. Based on his experience, he warns that shrinking trade surpluses will curb foreign demand for US Treasuries. In the financial realm, Innecco views the rise in gold and mining stocks as an early signal of eroding faith in fiat currencies. He sees substantial upside, pointing to charts that show precious metals significantly undervalued relative to major indices. To understand gold's performance, it's essential to compare it with the performance of other major assets. Gold's impressive gain over the past year significantly outpaces the S&P 500, which has risen by approximately 22.05% over the same period. This emphasizes gold's strength as a safe haven asset, especially when contrasted with the broader stock market. Before we dive into Mario Innecco's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I think is going to happen now with all the tariffs and all the other trade disputes is that this dollar system is going to be over because President Trump wants a much weaker dollar. It doesn't want everyone wanting dollars. So that is a paradox in itself as well. So if the rest of the world becomes less dependent on doing business with the US, and why would they do that? Well, because they can get better terms amongst themselves, in particular the growing BRICS bloc. Well, they'll go to that bloc. They'll deal with other countries multilaterally. The multipolar world, I think, is going to decrease the demand for dollars massively. And that's being done by the Trump administration themselves. I'm not sure if they are aware that this is going to happen. Yes, they think that the U.S., and it could very well happen, the U.S. could redevelop its industrial base and start selling to the rest of the world as well, and people would need dollars as well. But that is highly possible. But what's happening now is alienating a lot of countries into doing business with the U.S. It's backfiring. So that's why I think, there's going to be a lot less demand for dollars, a lot less foreigners buying treasuries to basically park their surpluses. Is there a way out of this? Well, when you look at what President Trump has been saying, his administration, his officials in the cabinet, it's all very rosy and positive. And I guess that's the only thing you can say when you're going through a really, an existential, a storm that could destroy everything. And is it any wonder, this is another signal here that non-Western central banks have been loading up on gold like there's no tomorrow since 2022. They've been buying record net amount of gold since the Bretton Woods system was created. They know that this system, the dollar system, is on its last legs. So what I want to do now, before I conclude, is show you some charts of gold, silver, and some comparative charts to show you that if you are prepared for this in terms of having gold and silver and the miners, and again, this is not advice. What I'm trying to do is hold on for dear life, because sometimes the short-term noise makes you concerned. But if you look at the bigger picture, I think we're only in the beginning of this, and it's going to be one for the ages. This massive bull market in the precious metals and hard assets. Of course, the only reason it's going to be one for the ages is because a monetary system is dying, i.e. the dollar system. So I've got here silver versus the S&P. I mean, this is still nowhere close to where it could be. I mean, the outperformance of silver versus the S&P is going to be quite something behold, in my opinion. Here you've got gold versus the S&P as well. Short-term, well, relatively short-term chart going back to the beginning of the century, and then a longer-term one, so a lot of room there too. And we've got the other one within the gold space, which is the Philadelphia Gold and Silver Index versus the gold price, and that's just starting to take off, but it's nowhere near where it used to be, even in the 90s, when, well, 80s or 90s, when we didn't really have a bull market in gold. So the opportunity is huge. And the miners themselves, of course, we've just seen the GDX making new highs. We're almost back to the high from 2011 when gold was at 1900, and now we are above 3000. So you can see what the potential there is. And then you've got the GDXJ as well. That's nowhere near where we got to in 2011. And you might be asking, and I get a lot of this question, which companies should I buy? I did this back in the early 2000s, mid 2000s, when I wanted to invest in the miners. I just went into a fund that existed at the time called the Tocqueville Precious Metals Fund, and I looked at their holdings and I picked a few companies there. I just went through it. You could do the same thing, or you could just buy the GDXJ ETF or the GDX.
As expert Mario Innecco explains, the Bretton Woods system collapsed when President Nixon ended the dollar's convertibility to gold. However, the subsequent petrodollar system sustained the dollar's dominance, granting the U.S. an exorbitant privilege to print money. However, Innecco warns that this bred complacency, and with the Saudi petrodollar deal now ended, that privilege may be nearing its end. There are also hints that Saudi Arabia is open to accepting yuan or other currencies for oil exports. If Saudi Arabia begins settling oil trades in non-US dollar currencies, we may see a big shift in global currency domination. The US dollar, and petrodollar for that matter, may see a halting end to its dominance. On the other hand, the United States is facing growing structural challenges. Its federal debt has surpassed $34 trillion, and rising interest rates have added pressure to the national budget. While the dollar remains dominant, the combination of high debt, slower growth forecasted at 2% annually, and increasing geopolitical fragmentation could gradually undermine the dollar's global supremacy. Let's get back to the interview.
Towards the end of World War II, the Allies knew they're going to win, and they're getting prepared for the post-war world. We can discuss a lot of reasons why they did that, but I think we need to stick to what happened here for now. Yes, so they started already looking into this, I think, in 1942, but in 1944, they had the Bretton Woods conference in New Hampshire at the Bretton Woods Hotel. And they devised a system based on the dollar and gold, of course. The United States, having at the time 2/3 of the official gold reserves in the world, was the only country really who could get things going again after the war. The two wars had really kind of bankrupted Western Europe, and the US got all the gold, right? Most of the gold. So the dollar was fixed at $35 per troy ounce, and the other currencies, they were linked to the dollar. They weren't linked directly to gold, and that's why it wasn't really a gold standard. It was a gold exchange system. It wasn't like in the 19th century. But anyway, so for example, the pound was fixed at a certain rate versus the dollar. Let's say Britain or the UK, if Britain ran a trade surplus, it could at the end of the year or whenever it wanted to take the dollar currency and redeem it for gold at $35 an ounce. And that's how the system worked. And that was applicable to all the other countries. And yes, there were some devaluations against the dollar through the decades, but it was very rare. All the exchange rates were fixed. The foreign exchange market was not as big and volatile as it is today because people still had a bit of sanity. They knew that money had to be a fixed weight of the most marketable commodity, which is still gold, I would say. And by most marketable, I mean that you can go anywhere around the world and exchange it for local goods. People will recognize and they'll accept gold anywhere. So that's why it's not just a currency, but it's also money. So the US had the responsibility to lead the world in this system of sound money. And well, the Bretton Woods dollar system. The problem that it created, though, and it was a paradox or Triffin's paradox. That was a Belgian economist, I think. He was from Belgium, who said that under this system, all the other countries outside the US, they would have to try to earn as much dollars as possible, because that was the only way to trade internationally. So what that would lead to eventually would be huge trade and current account deficits for the US. And that's what we've seen. And it has become even more pronounced since 1971, when Nixon really suspended this whole Bretton Woods system. Yes, he suspended it temporarily. He didn't really destroy it, but de facto he did. And what happened after 71, the US delinked the currency, the dollar, from gold. And for a couple of years, they kept trying to have the same system without gold. And the same system meant that the exchange rates they try to fix the exchange rates, keep them fixed. But you can't do that when governments and central banks can create these fiat currencies. Now, they were fiat currencies out of thin air because there's no gold anchor. So the fixed rate system collapsed in 1973. And with that, the trade fluctuations, the deficits, the surpluses on the other side became really pronounced. And then with the creation of the petrodollar, which was kind of informal, an agreement with the US and the Saudis to make sure that the Saudis sold their oil only in dollars, that kept the demand for dollars. Because a lot of people are asking, why should we accept dollars if it's backed by nothing? It's not as good as gold anymore. And I remember my father saying that back in the 50s and 60s, that was the term. People used to say the dollar was good as gold because you could, well, not persons or individuals, but any country's treasury could go to the US Treasury and ask for the gold. If they had $35, they could ask for an ounce. Or if they had $35,000, they could ask for 1,000 ounces. So what that led to was even more demand for the dollar, because not every country in the world produces a lot of oil. And Saudi Arabia was the biggest producer of oil. So by selling it in dollars, it made sure that the oil market remained the dollar market. And that's what's been or allowed the US to run this scheme, to have this exorbitant privilege.
There are signs that gold's price could rise this August, but equally strong indicators suggest a decline or even stagnation. The current gold cycle offers compelling opportunities for investors. Historical patterns, expert analyses, and economic indicators all point to a sustained bull market, with potential price targets ranging from $15,000 to $50,000 per ounce. Are you prepared for a world where the US dollar is no longer the cornerstone of global finance? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.